Dr. Pawan Goenka with us. Mr. Goenka, good morning. Thank you for joining us. Mr. Goenka, how time changes. Last time when I had Anish Shah on the show, I actually specifically asked him that why Mahindra and Mahindra stock was underperforming and why it has been a laggard for the years. Well, let me rephrase it differently. Mahindra and Mahindra stock is outperforming, and it is outperforming every major stock now. So what a change of season and a change of timing there.
Yes, of course. I think the last 2 months, since the time that you had Anish on your show about a month and a half ago or 2 months ago, a lot of things have changed, and mostly for the better, basically for the rural economy and the agri sector, and that obviously is driving our performance in terms of share price, profits, and everything else that you would like to count.
Markets are excited about your capital allocation policy, Mr. Goenka. You know, I can get into demand and the rural impetus, but the need of the hour, I guess, for your shareholders and our viewers is that to understand your capital allocation policy. With each quarter, we're getting more and more sense that Mahindra and Mahindra now wants to focus on businesses which give which have double-digit ratios, and you will not, in a sense, go ahead with loss-making ventures. Let's talk about it slightly extensively.
Sure. I think what we had said last time, that remains, we remain consistent with that, that we are going to be looking at our businesses outside our core business a lot more prudently and look to get financial performance from these businesses in the short and medium term. Unless they're strategically very important, where obviously we'll give a longer rope in such cases. And we have already made some very important announcements, starting with SsangYong in April, then Gen Z in June, and 2 days ago we announced that we are not participating in the US Postal Service bid that we are working on for the last 2 to 3 years. And these are all sort of clear indications that we are serious about what we said on capital allocation. And right now, all the businesses are going through an analysis to see which businesses belong in a portfolio and which businesses we should exit either by virtue of selling them off or slowly tapering them off. That decision is happening real time, and as we come to conclusion on any specific business, positive or negative, we will take action on it and move forward.
Let's talk about where the real excitement is coming from, the rural economy, your tractor business. What is the right way of looking at the resurgence in the rural economy? Is it one-off or this is a multi-year trend? Because frankly, if I look at the last 5 years of the rural economy and compare that with the urban economy, the rural economy has gone through stress. Could it be reverse? And could it really be a multi-year trend for a tractor company and a rural-facing company like Mahindra and Mahindra that the headwind now will become tailwind?
Well, right now, almost everything is going right with the rural economy. One of the indicators is government spending, for example. In the quarter that went April, May, June quarter, the government spending in rural economy, agri economy was almost double of what it was last year, the same quarter. And that certainly brings in more money in the economy, and therefore it sort of has a cascading effect. Then obviously the Rabi crop has been very good. The revenue for the farmers with our count is about 12-13% higher than last year for the Rabi crop. The monsoon is extremely good, both in terms of the amount of rain and distribution of rain. And the Kharif crop, so far the sowing has been 19% higher. Now, one cannot say that this is going to be there forever and ever. But I would have to say that in my 4 or 5 years of looking back, this perhaps is the year when everything has come together positively for the agri economy. Now, undoubtedly, if I look forward, undoubtedly the government focus on agri and rural will not come down. And therefore, we will continue to see that kind of input coming into the economy from the government. All the announcements that were made by Honorable Finance Minister in her 5-phase announcement, a lot of them were on agri economy, and a lot of them have already been implemented or in the process of getting implemented. And all of these are going to make a huge difference to rural economy. So unless we get some extremely bad news on the nature side in terms of monsoon, we should see a good run for the agri economy for a few years. Right now, reservoirs also are one of the highest that we have seen in a long, long time, and all of these things make a huge difference for agri and rural economy. So I would have to say it's not a one-off, and we should see a good run for a while in the agri and rural economy.
Sure. I was just going through your numbers as well, and you've managed to clock double-digit margins in a weak quarter, clearly reiterating the focus of prudent capital allocation yet again. So would it be fair to assume, Dr. Goenka, that going forward, the capital allocation is going to be more towards the tractor division because that's where growth is coming in from, like you just said?
I don't know if that would be right to say so, because when we look at the auto business and the tractor business separately, these are sort of our two largest businesses in Mahindra and Mahindra Limited. And both businesses have their own requirements and their own sort of future potential. Auto right now is down. The first quarter obviously was not so good for the auto industry as a whole. And Mahindra, obviously, being part of the industry, was roughly at the same level as the industry. Give or take, some segments are a little better, some segments a little worse, but more or less like the industry. But auto segment obviously has a potential that we cannot let go. And we have to work on it. This is a bigger business in terms of revenue and in good years in terms of profit also. But certainly we would provide significant impetus on the rural business. And there's a lot that we are doing, as we have talked about in the past on your show. There's a lot that we're doing for our agri-business in all parts of the business. And that will continue. That will not be starved of capital. But auto business, we have new products that are coming up. We have electric vehicle investment that is happening. We obviously don't need any capacity enhancement for a few years to come because everybody in the industry has enough capacity. But as far as products are concerned, including electric vehicle, we certainly will continue to support the auto business in terms of capital allocation. Where we are looking at in terms of capital allocation are businesses outside a mainstream business of auto and tractor verticals that we have in our domestic market. That's where we're looking very hard to see whether we should continue to have those businesses continue. For example, not investing in the U.S. Postal Service. That would have been a $300 to $400 million investment. And we decided that really doesn't fit in the core. And given the COVID situation where the cash is tight, we should not get into that business.
Talk about the big launch for the year, Thar. Tell us a little bit more about what kind of segment, what kind of price points it's going to launch in at. And more importantly, do you really think that, given that this is an iconic old-time brand, will this relaunch really be able to live up to the hype of, what the brand has actually done in the past, given that your SUV segment has seen a bit of a decline over the years?
Well, I would hope so, because we have been working on this product for 4 years, and this is the first time we have done an all-new platform for Thar. Thar, as you know, sort of came from the original legacy product that we had from CJ3B and MM540 and so on. And this is the first time we have done a brand new platform. The reveal, it's not a launch, it's a reveal on 15th of August. You'll have to wait a few more days to get answers to all the questions that you have asked me. I cannot obviously be preempting what we're going to be telling you on the reveal. But what I can say is that the buzz about the product is very high. We had done a short social media teaser 2-3 days ago, and we have had already like 2 million hits within 2 days on it. So there's a lot of buzz around it. And what people are looking forward to is that the old Thar was more like a second or third vehicle because it didn't have a lot of creature comfort, a lot of the gizmos that one would like to see in the new vehicles. And the expectation is that the new Thar will not necessarily be a second or third vehicle. So we are very excited. I think Thar lovers are very excited, and they're looking forward to the new product. And I hope that we can bring many more people in the fold of Thar lovers.
Mr. Goenka, while I'm tempted to also ask you on the rest of the pipeline for the year, I'll come to that. Just on SsangYong, markets had lauded, M&M's decision to stop capital support earlier in the year, considering it prudent. But you haven't shared any specific plans for other loss-making businesses so far. By when do we see substantial value creation following the new framework?
I don't know what you mean by substantial value creation following new framework. If you mean in terms of P&L, obviously, as we get out of loss-making subsidiaries, the P&L will improve, no doubt about it. But it's not something that can happen overnight, because to do justice to a business, we have to properly evaluate it and not be driven by COVID-19 situation, because clearly under COVID-19, many businesses are under stress, and we should not be driven by that one sort of event that is happening. So we have to really look at the business in terms of what are the midterm prospects to do justice to the potential of the business. And even after we made a decision, it's not like we can switch off the lights overnight. There is a time it takes to slowly sort of get out of a business. There are many factors involved, market, customers, employees, suppliers, dealers. We have to take care of all of these things before we can shut down a business. Our target is that by end of this financial year, more or less, we would have decided on all businesses on what kind of future the business has. Doesn't mean that we'll announce about all the businesses on 31st of March or 1st of April, but we would have probably made a decision on all the businesses by that time frame. And we'll start an execution process. There will not be any kind of ad hoc thing that we'll do. And it doesn't mean that we are going to be getting out of everything. There is just COVID-19 in a way has given us a window of opportunity to look at everything that we have done, see what is working, what is not working. And like any decision or any bunch of decisions that we do, some work very well, some don't work very well. So it's given us an opportunity to look at all of these things, become very prudent about where we put in money. And obviously, markets are liking it. We have gotten very positive feedback saying that one of the things that was missing in Mahindra in the past was a very clear policy on capital allocation. And this is what we are in the process of doing. And I think it's going very well. We have made 3 major announcements. We will continue to make announcements as we see appropriate. But don't expect that everything that we do, we will be bringing out in the open media.
Of course. And yes, markets have lauded it. Mr. Goenka, thanks for answering that in great detail. You talked about, of course, the rural recovery. In terms of launches going forward and what's in the pipeline, in terms of how strategy is evolving, will it continue to be focused when it comes to launches that will also do well in the rural segment? Are you also perhaps looking at something other than SUVs, or will you continue to look at models perhaps that have evolved a little bit, because we have seen a slight tapering when it comes to the SUV market share?
Well, even in our core businesses of auto and tractor, we are looking to see how do we bring a core, become more core. That means what is the narrative in the automotive business? What are we going to be doing? We have been kind of doing too many different things, and we will be looking to see what we should not be doing in the auto business. What is our core? Where do we focus on? Which regions of the world do we focus on? So all that is going on right now. And clearly, our focus is where we have a strength. Even though we have lost some market share in SUVs, yes, I accept that. But where we have strength is in SUVs, and where we have strength is in small commercial vehicles and pickup. And these are the segments where we would perhaps accelerate our focus. Bring in many more products. In pickup, for example, we have increased our market share to almost 70% in the quarter gone by. In small commercial vehicles, we are increasing our market share. So while SUVs, we have lost market share because of a lot of players coming in, but there are other sectors where we are increasing market share, and we will have very strong focus on these sectors. But some things that perhaps we don't have a strength in, we will look to see whether we should not be doing those things. And again, these are not overnight decisions. We have to look at many factors. As I said, employees, suppliers, dealers, customers, all of that we have to take care of before we can decide anything in terms of shutting down a business or a vertical in a business. So I don't think that we have any concern on the future product launches. We have already talked about the 3 launches that are happening in the next 1 year, starting from Thar, that will be revealed in less than a week, W601, Z101, and we have already done planning for what happens beyond that, and products are under development right now. Electric vehicle is another area where we have tremendous focus. Nothing has changed in that because of COVID-19. We continue that focus on tractor, which obviously is a sector where we have big strength, a sector that looks to be growing very well going forward. We are really spending significant amount of resources right now in developing global products, and a product that we have codenamed K2 is something where we really expect to bring out with that product about 2 years from now, and that should be a significant, I would say, revolution in terms of the kind of product portfolio that we have in Mahindra.
Mr. Goenka, I know Mahindra & Mahindra is always considered as a tractor and auto company, but for a successful auto and a tractor company, you need engineering skills. You've had little bit of presence in the defense business, but not a sizable one. We know the announcement which came out over the weekend. How important is that for you? I mean, can defense manufacturing be the next big thing for Mahindra & Mahindra, looking at your engineering capabilities?
I won't be able to talk about this in too much detail because it's still evolving. But what I would say is that defense manufacturing will become a big thing for India. And clearly, there are only few players in India that have right now any significant opportunity or significant activity in defense. Mahindra is one of those. How it's going to pan out, how it's going to evolve, what areas we will get into, what new things we will do. Again, all of these are strategies that are being worked upon right now by the business, and it will be premature for me to say what size of defense business Mahindra might have 2 years, 5 years, 8 years from now. But it's certainly a big opportunity for all the players in India who are involved with defense.
Last question, Mr. Goenka. If I look at the very broad split of Mahindra & Mahindra, 65% is farm equipment, tractors and agri, remaining is auto. So when it comes to checking on the capital allocation, I would imagine that large part of the capital allocation change will come in the auto business, because within the farm equipment business, you don't have too many stress businesses.
In terms of businesses outside India, are you talking about? Or within the core business in India?
No, I'm generally saying, let's say if I look at this, yeah, no, I'm talking about the revenue of Mahindra & Mahindra, 65% farm equipment, remaining is autos. Here you have now you're looking at checking your various capital allocation. So I would imagine that the capital allocation changes what you would do, they would largely be dominated to both domestic auto business and the global auto businesses. I mean, auto would be the focus area here, not farm equipment.
I don't. First of all, that 65-35 breakup that you're seeing, I think you're talking about the last quarter, right? The previous quarter.
Yeah.
So I think previous quarter is not a good way of looking at the breakup, because as you know, that tractor industry has really come back with flying colors, with revenues or volume being much higher than previous year in the month of May, June and July. And auto is still struggling at about 30, 35, 40% of revenue. So therefore, it's not a fair comparison to look at last quarter to see what kind of revenue share do we have. We really need to look at last year, perhaps, and I don't have the number with me as to how the revenues of auto and tractor pan out. But I think overall, the investment that happens in the auto business is always higher than the investment that happens in the tractor business, because the product development in auto is a lot more expensive. The number of products that we have to launch in auto are a lot more. And therefore, always in any auto and tractor comparison, you will find that the investment is a lot more in auto than in tractor. For example, if you look at our DNA in auto is probably about 5 times that of DNA in tractor, roughly. I don't have the precise number with me. So it is fair to assume that we will have a lot more capital allocation in auto than in tractor. But that's not because we are starving one business at the cost of another business. That's the requirement of auto and tractor, which is different. Auto requiring a lot more capital.
Sure. Dr. Goenka, you launched the Atanibar series here at ET now, and I must congratulate you. We understand that you've been appointed as the chairman of the Atanibar Committee.
It's not called Atanibar Committee. It's a committee that has been set up by Department of Commerce and DPIIT to help grow manufacturing in specific sectors. And we have 20 sectors that have been identified to do that, sure. And we are working on that. Yes, I have been appointed chairman of the committee by the committee. And we just started working last week. We had one meeting, second meeting is happening tomorrow. And we are really hoping that by bringing industry and government together and doing cross-department and cross-industry coordination, we will be able to make some difference in growing manufacturing. I personally see tremendous opportunity that India can grow in manufacturing. And clearly with Atmanirbhar Bharat, there is a renewed sort of emphasis that has come into this. And I'm very happy that the government is putting so much sort of focus on it. I've been a manufacturing man all my life, and very happy to be able to work on this and probably help to grow manufacturing to some level.
I'm sure you will, and congratulations once again from all of us here. On that note, we're going to let you go. Thank you so much for taking the time out and speaking with us today, Dr. Goenka.